Are you looking to seriously grow your wealth? I've seen 43% gains in 2024, and I'm on a mission to hit $100,000 from scratch. I'm Steve, the Dividend Dad, and in this video, I'm pulling back the curtain to my entire journey. You'll get to see my portfolio performance, my exact investing strategies, crucial tips that you can use, and a detailed breakdown of my May dividend income. Don't miss this. If you're finding these portfolio updates interesting, remember to like and subscribe so you don't miss out on my future updates. In May, my portfolio bounced back and had some healthy gains across the board, which is quite refreshing after the declines we saw in April. This month, my portfolio had a healthy 5.5% gain. This has been my strongest month so far this year. But how did I do against the S&P 500? The benchmark for most investors. The S&P 500 had an impressive 6.2% gain this month. So I didn't beat the S&P 500. Year to date, the S&P 500 has seen gains of 5.1%. Year to date, my portfolio has seen gains of 8.3%. So I might be behind the S&P 500 this month, but I'm still ahead on a year to date level. We are also at the end of month 5. And I'm already past the halfway point for my 14% annual gains target. Of course, this can change throughout the rest of the year. At the end of May, I currently have $3,271 in my portfolio. If we look at my 0 to 100k tracker spreadsheet, I should have $3,273 at the end of May. This includes the contributions and the compounding gains that I get each month. I still have about $100 in a holding account from April's contribution, which is waiting for a good opportunity. So, the portfolio balance is looking quite okay in this respect. Let's take a look at individual holdings. What have been my biggest losers and my biggest winners? This month I have had more gains than losses, which is always good. My biggest losses this month were Rio Tinto Group with minus 3.62%, AbbVie with minus 2.87%. My biggest winner this month were Nvidia Corporation with 29% and Dell closely behind with 25%. Let's take a quick look at the overall performance of my portfolio. I've made a very simple spreadsheet on Google Sheets. It just makes it easier to see what's happening.
So as you can see, a lot less red in this month of May. We have a couple of month-to-month gains with Nvidia, Microsoft, American Express and Coca-Cola, Dell, and we have Uber and ACB down here, and Bitcoin is also on the move up. It's also worth noting that we have quite many stocks that are almost double figures or double figures with Visa, MasterCard, IBM, Bank of New York, American Express, Dell, Caterpillar. So as you can see, it's been quite a good month. Some concerning stocks here. Pepsi, they've been on a decline for quite a few months now. EOG, they're going down, but I suspect that's something to do with the tariffs that Trump is doing. AbbVie are also on the way down, but I believe they're going to bounce back also. And Rio Tinto, they're on the way down. So month to month losses on those. Everything else is looking quite good.
So, before we dive in, please remember the disclaimer on screen, as this content is for educational and entertainment purposes only and not financial advice. eToro is a multi-asset investment platform. The value of your investments may go up or down. Your capital is at risk. Copy trading does not amount to investment advice. The value of your investments may go up and down. Your capital is at risk. Past performance is not an indication for future results. Trading history presented is less than 5 complete years and may not suffice as a basis for investment decision. Do not invest unless you are prepared to lose all the money you invest. This is a high-risk investment and you shall not expect to be protected if something goes wrong. Alright, let's dive into what I bought, what I sold, and most importantly, what dividends have been paid out this month. That's right, passive income. In May, I made 5 purchases and I'm going to break them down. Number 1 was ELG Resources, where I increased my position by an extra 1.17 shares at a cost of $130, bringing me to a total of 1.26 shares. Number 2 was Omnicom Group, where I opened up a new position with 1.69 shares at a cost of $130. Number 3 was FedEx. Again, I opened a new position with 0.59 shares at a cost, yes, you guessed it, $130. Number 4 was Realty Income Corporation, where I opened another position with 2.28 shares at a cost of $128. Yeah, I had to pay some fees. The first 4 purchases were all done at the beginning of May, or within the first few days. Number 5 was a little bit different. On the 14th of May, AbbVie stock dropped by 5.5%. This seemed to be triggered by Citigroup lowering their rating from a buy to neutral. They also dropped their target price from $110 to $105. So I saw this as an opportunity to get some good shares at a discount price. I increased my position by 2.22 shares at a cost of $396, bringing me to a total of 2.84 shares. Towards the end of the video, I'll be sharing more information about the new positions I've purchased this month, so be sure to watch until the end. In May, I had 8 companies paying dividends into my portfolio. So let's check them out and their dividend amounts. So I had $1.37 from CVS, 74 cents from the Bank of New York, $1.32 from Dell, 34 cents from American Express, only 7 cents from MasterCard, 86 cents from AbbVie, and 15 cents from Colgate, and finally 5 cents from Caterpillar, giving my portfolio a grand total of $4.90 in dividends paid out this month. Looking at the overall picture, my portfolio's dividend yield is currently at 2.67%. This does change due to stock price fluctuation and where I choose to increase my positions, so I'm aiming around somewhere between 3 and 4% of my portfolio to be a dividend yield. This current yield is expected to give me an annual income of $87.22 and a monthly income of $7.27 and a daily income of 24 cents. Let's look into my new purchases and give you a bit of a backstory for them. So first up, Omni Group. Omni Group Incorporation is a leading American global media, marketing and corporate communications holding company headquartered in New York City. It was founded in 1986 and operates worldwide as one of the largest advertising holding companies. Omnicom Group has paid dividends for over 40 years and has increased their dividend for more than 30 years consecutively. I believe that because of the recent volatility and the increased cost of living, the price of this stock is lower than its actual value. In the future, as the economy grows again, this should give me some good returns. Also, because of the 30-year consecutive dividend increases, this gives me the knowledge that they should be able to ride out the market volatility. FedEx Corporation is a global leader in transportation, logistics, and e-commerce services. Founded in 1971 and headquartered in Memphis, Tennessee, the company serves over 220 countries and territories and operates the world's largest air cargo fleet. FedEx has increased its dividend every year for the last 24 years, with no years of reduction or suspension. Again, this was attractive for me because firstly, the consecutive dividend increases for the last 24 years, but also because they are a global leader in their industry, the competitive advantage. Realty Income Corporation, known as the Monthly Dividend Company, as a leading real estate investment trust, specializing in freestanding single-tenant commercial properties across the United States, United Kingdom, and several European countries, Realty Income has paid monthly dividends for over 54 years and increased its dividend for 32 years consecutively without a single reduction. This is quite interesting for me Firstly, I was looking at increasing my REIT sector in my portfolio. I must admit, being known as the monthly dividend company is quite attractive. The price is nice and low and I could purchase a couple of shares, therefore increasing my overall monthly dividend payments. I've had my eye on this one for a while and now seemed like too much of a good opportunity to miss. For me, the market has been good this month. Although I didn't beat the S&P 500, I'm still quite happy. There are still many concerns about pending tariffs and what they will ultimately mean. Also, will these tariffs drive higher prices in the shop? Consumers aren't sure and investors aren't sure either. For now, it looks like most people are carrying on as normal. Because of this, I get a sense the markets are calming down a little bit now, not so volatile when new news comes out about a tariff or something else that Trump says to the press. Are investors trusting the data more now and not getting caught up in the media hype? Only time will tell. So let's take a look at the donut ring, particularly the smaller holdings. These are the holdings I want to increase over time. But every month, all the stock prices in my portfolio need to be evaluated and the best opportunities need to be taken at that time. This can leave my portfolio balance a little bit uneven, but I believe it's the strategy that will give me the best returns long term. By buying stocks that are on discount rather than spreading the contributions across all of the stocks in my portfolio. As much as I enjoy buying new positions in new companies, I also have to be careful not to grow my portfolio too big. It still needs to be manageable. So over the next few months, I need to evaluate the less performing stocks. The simple monthly gains and losses table that I've made should be good to see what stocks are performing better than others over the long term. This won't be an easy task to do because there will be many different factors to consider. Maybe I will make a future video about this and how I go through the process. If you think that would be useful or interesting, leave a comment below saying stock evaluation portfolio balance or SEPB for short. On this channel, I'm revealing what it's really like to invest from scratch. Like many of you, I have a family, mortgage and bills, which makes this $0 to $100,000 challenge incredibly real. It isn't just about the numbers, it's about building my retirement fund and ensuring financial security for my family for years to come. I focus on a low-risk, sustainable investing strategy. So if you're new to the stock market, or even if it just feels a little bit daunting, this channel is for you. Come and join me. I'll be sharing my full experience on this journey. If you're finding these portfolio updates interesting, remember to like and subscribe so you don't miss out on my future updates. Got questions? Drop them in the comments below. I'll do my best to reply quickly or even create a dedicated video on your topic.